please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Believes in Indian IT, you should remain invested in it.
Okay, and with that, there goes the bell. And the first trade is mildly negative, 10 points lower on the Nifty, 23 down on the Sensex. Yes, that's where it is. 10, 11, 12, 13 points lower on the Nifty. Not a whole lot. TCS starts 2% higher. 2.04, 2.2, 2.16, okay, 2.2 higher. Infosys basks in that shadow, 1.3 higher. Gale, Wipro as well. So it's all the tech stocks. Therefore, it's a positive view from TCS and its rupee at 66. That's keeping in the first top 5, 3 of them are tech stocks. No, 4 of them are tech stocks. There's only Gale to add. Otherwise, TCS, Infosys, Wipro, Tech Mahindra and HCL Tech are among the top 6 stocks that are up. The other one is Tata Motors, which has done somewhat better. Then you have Bajaj Auto, Lupin, UPL, etc., which are mildly in the green. But the red brigade is Hindalco, Vedanta, obviously because metal stocks have trimmed a bit. Then come BPCL and HPCL, which are down about 0.5%. No, okay, BPCL is 1.2% lower and HP is down almost 1%. Banks actually, Yes Bank has taken a knock of 0.9. I was not prepared for that because they've just got permission from the Reserve Bank to open foreign branches. And the Rana Kapoor extension is due to be discussed in the April 26th board meeting. Considering all this, one would have thought it's positive, it would be positive, but looks like the Indices Bank divergence may be casting its shadow. People may be expecting things, but actually they've already done their divergence bit. They have no inspections after that. But nevertheless, that stock is a little in the red, and that could have something to do with the bond yields as well, because they have a bond book. Bajaj Finserv is down. So I think NBFCs are finally reacting. And now the Bank Nifty is down 0.4. So clear reaction coming to the bond markets.
Okay, well, even the mid-caps have started on the back foot, so down about 50-odd points for the mid-cap index. The market breadth is split right down the middle, so not too much of a worry there. The stock of the moment on the downside is Eveready. It's down almost 10% right now, and the volumes are picking up because of that 170 crore penalty, as we spoke about. So that stock is taking a knock. JB Chemicals also in the news, down almost about 6.5% over there. But on the upside, a lot of result reactions. On the upside, the stock of the moment is Mahindra CIE, definitely. Very good set of numbers, and that stock is now up about 5%. Bharat Seats, good numbers, up 4%. Cyient, good numbers, up 4-odd%. Reliance Power, the street doesn't like those numbers, down almost 1.5%. Actually, Midcap IT continues to move up. So after Mindtree, another day running, is up in the green. It has emphasis for company this morning, so that stock as well is looking pretty good. But apart from that, the market is now losing a bit more ground in the mid-cap space. So just keep an eye out on that. Bhushan Steel down 3.5. All your vulnerable names, JP Infra, Castex, Lanco Infratech, all under pressure. Nalco is giving up its gains from yesterday. All ADAG stocks, Rel Power, Relcom, are all in the red. So not the best opening really for the market. It's flat now, but with a red hue.
Yeah, I think the Bank Nifty hasn't had a good start because it opened flat and then opened down, then went down, which is always a negative thing. Let me just quickly take Ashwini's thoughts on this before we discuss more stocks. Ashwini, is there a trade on either the Nifty or the Bank Nifty?
See, a couple of things that Nifty has now opened up a discount. Plus, yes, IT is up 220 odd points, but a lot of other sectors are negative. Metals are negative, financials are negative. All sorts of commodities, PSUs, they are negative. So my sense is that there is follow through on banks, and once the IT rally is probably done, you'll have pressure on the downside. So right now, I think we have taken short positions on Bank Nifty. Let's see if we are able to get follow through. If the yield, etc., keeps getting worse, and at some point, I think banks should accelerate on the downside.
Okay, so short positions on banks, Ashwini, the stop would be the open, which is also the high?
Yeah, basically if the open starts to get taken out, then that trade is over.
Okay. Well, Mitesh, anything on your radar now?
I think I would still be stock specific, and I think Biocon still looks very interesting to me. I think it's clearly one stock which is showing follow through of yesterday's breakout. So I think keeping a low stop just below today's low, I think around 636, 635 half is what I would recommend. I think this still can be a good trade for next 2-3 days.
I think your Karnataka bank short, wasn't that your short? That's working. Any other bank you would short?
I think, in fact, most of the PSU banks are, negative. In fact, we had a sell call yesterday as well. They didn't fall yesterday. But a stock like Indian Bank, I think that should be a good sell. Keep a stop at about 314. Look for targets of 295. Similarly, I think I've been negative on Oriental Bank of Commerce and Bank of Baroda. So in the short term, I think the intraday charts for most of these stocks are slightly negative.
Okay. TCS, by the way, is now up about 3% now. And, there's some times when, you say that, okay, stock has already rallied. But then, these are the cases where you just think that, okay, maybe you are chasing that move. 3.5% higher now is what we have on TCS. Now, within 3% of becoming India's first $100 billion market cap company, that would be some occasion, of course. Ashwani, what's the trade here on TCS?
Well, it's broken out of the previous high, which was about 32.20, 32.30. But again, you are buying good news, so that's never a good feeling. Maybe it's turned around, but I would, tend to buy it closer to say 3200 than chase it right now.
Okay, Prakash Gaba, your thoughts on the market opening and any individual stocks that you would be looking at now?
Yes, Sonia, looks to me the market is stretched, unstretching is happening here. I think we should see a slide here. It's a good shorting opportunity here even now. It looks like we have a follow through. I think Bank of India on the short side looks weak, can see a slide to around 104 zones.
Okay. Ashwani, what's the big call for the day then?
I think financials will pick up on the downside because it's not only financials, the yield seems to be affecting mid caps and across the board. I think finally market is taking cognizance of high commodity prices, etc. So PSU banks should get a hammering. Plus you have your HPCLs and BPCLs, etc. They should work. If you want to hedge, take something on the other side. Probably IT will hold up for the day.
Okay, gentlemen. Meherboon, Prakash, Mitesh and Ashwini, thank you very much. And of course, we will touch base with our technical experts yet again and again and again. For the moment, the markets have settled with about 0.5% cut on the Nifty Bank and pretty flat on the Nifty because there the banks have gotten balanced by the IT stocks, especially TCS, up 3.5% as we speak. With that backdrop, let's invite our market master for the morning. Harsha Upadhyay, CIO Equities at Kotak Mutual Fund, joins us now. Good morning, Harsha. Good to have you with us. Your thoughts on TCS itself, rupee at 66. Will you go IT heavy in some of your funds?
Good morning, Lata. We were carrying underweight position on IT for quite some time, and in the last couple of months we have bridged some of that underweight position. Still we are not overweight on the sector because on a as a sector basis I don't think there is anything that you can really say that the profitability margins will improve or the growth rates will improve substantially. But there are a few stocks where the trajectory seems to be improving. At the same time, one has to take cognizance of the fact that the largest vertical for most IT companies is BFSI, and that vertical seems to be still under some sort of pressure. Whatever you said about rupee is right. Rupee has been depreciating a little bit, but it has never been a great factor in terms of determining profitability for IT companies. Why do I say that? If you look at rupee between 2012-13 to current levels, there has been a depreciation of almost 50% in rupee as against dollar. But almost every other IT company has shown declining margin trend during the same period. So while we may have some uptick in quarterly numbers because of rupee depreciation every now and then, but I don't think as a trend that's going to help IT companies.
Okay, in fact, right now though IT is surging. TCS, Wipro, HCL Tech Mahindra, all making highs of the morning. And just take a look at the mid-cap IT. That's just running away. Hexaware, Mindtree after yesterday's move is up another 1.5%. NIIT Tech, that stock is making highs of the morning. One of the strongest mid-cap IT stocks, of course. Tata Elxsi also. Yesterday also had a good day, but today also continuing. So looking quite good. Balancing out the Bank Nifty's 0.5% fall is what we have on the IT pack today. But so Harsha, good morning. Overall view on the market. You reckon we have absorbed the correction and are ready to move on? I mean, we've already moved on quite a bit from the low point, but you reckon the worst is over?
No, I think we are still in a consolidation range. I think there are several challenges which are in front of us. I think the kind of macro benefits that Indian economy saw for the last 3-4 years is certainly behind us. I'm not saying that all of that is going to reverse, but I think the kind of benefits that we saw because of lower crude prices, lower interest rates, lower commodity prices, all those seem to be behind us. And hence, I think the corporate world will have to take cognizance of possibility of higher raw material prices, higher fuel costs, all that. And at the same time, even in India, we seem to be heading towards some sort of tightening in terms of interest rates, which will also have impact on profitability on a lag basis. So given all this, I think while the macro challenges have improved, the confidence of businessmen seem to have improved simply because I think some of the short-term reforms which indicated some kind of a hiccup in overall business trajectory seem to be behind us. For example, demonetization or GST implementation, etc. So it's going to be a year of consolidation, both from a stock market performance as well as from a corporate world performance perspective. It is easier to predict the earnings levels or the growth levels in industries where there are no big issues. But in industries such as PSU banks or corporate-facing private sector banks, telecom or pharma, you really don't have a clue in terms of how the next few quarters are going to be in terms of earnings numbers. So to that extent, it's very difficult to predict headline earnings or valuations going forward. What you could probably do is look at some of the sectors where there is some steadiness in terms of earnings, and if those valuations are reasonable, one should be investing in those sectors.
Okay, by the way, the stock that is really rallying right now is Cyient. So just look at that, almost a 10% rally on Cyient right now. And remember, this is a stock that has given great returns. I mean, it's already rallied about 40% in the last 6 months. But, you know, phenomenal move there this morning. Harsha, I just wanted to come back to the point that you were making when Lata asked you about the IT stocks. Although there may not be as much potential in the large caps, according to you, do you think there's a lot of value accretion in the mid-cap IT names? Because, you know, names like Cyient, Mastech, Mindtree all reported good numbers this time.
Without getting into stock specifics, we believe that the mid-cap IT valuations are in many cases much higher than that of large-cap IT companies. There is a reason for that. In some cases, the digital business has contributed to larger growth, and also expectations are that that growth will continue. But one has to be really careful whether this kind of a growth is sustainable going forward, whether they will be continuously beating some of the large cap names in terms of growth and profitability. If you believe that that is possible, then I think buying them still makes sense. But otherwise, I think one needs to be cautious, because even within IT basket, the mid caps have rallied quite strongly in the recent past.
Okay. Well, I'm just looking at your top 10 holdings. You don't seem to have been a very big fan of NBFC. All I can see is HDFC in your top 10 holdings in Kotak Opportunities Fund and the other funds. What will you do with them now with the yield at 7.78?
Lata, we were always a little skeptical about the kind of growth that has happened in the NBFC segment, given there was so much of tailwind. One, there was really a smooth runway for growth because PSUs had vacated a lot of space. Interest rates were very, very low for a long time, which meant the cost of funding was low. I think many of the NBFCs also entered segments where the competition was less and where they could really get their footprint in, and most of that growth is kind of behind us, at least for this cycle. Now we have to see whether the kind of growth that they had seen in the past will result in some kind of credit cost going forward, and that is where I think we have to differentiate between various NBFCs that we have in the listed space, and we have been very, very stock specific in our approach. We like businesses which are more on a retail side of the overall lending business, and where we believe that the risks on the asset side are much lower. So that's how we have positioned ourselves in the NBFC segment. But clearly, I think some of the tailwind that we had seen in the past are behind us.
What about consumption stocks, Harsha, especially the urban consumption stocks? Massive rally, all of them trading at you know, all-time highs, most of them at least, and at all-time high valuations as well.
Consumption sector continues to be very, very strong. I mean, whatever numbers you look at, whether it is auto numbers, air passenger traffic growth, consumer discretionary purchases, whether it's jewelry or any other discretionary purchases, or you look at even consumer strong growth continuing. Earlier, it was only the urban segment which was contributing to growth in consumer discretionary especially. Now that has also changed, and even rural segment has started to contribute. I mean, we have seen last couple of months where the rural segment has also seen quite a bit of strong growth in segments such as auto and others. So clearly, consumption continues to be very, very strong. The only issue in the sector is the valuations, especially the relative valuations of some of these names vis-a-vis overall market. I think that's where you need to be a little cautious, but otherwise I think the numbers are really, really strong and are expected to continue in this fashion for some more time.
Okay, in fact, you do have, names like Hero, Maruti, M&M, even something like a Britannia in your list, your select focus fund. So some of these names have come off a little bit from their highs. Would you be making, or would you advise making fresh investments in many of these market leaders?
I won't get into stock specifics, but again, as I said, we really don't want to be buying only high growth, high PE, high valuation stocks. Our general approach to investments has been growth at a reasonable price. So within the available basket, wherever we find steady growth and reasonable valuations, we always like that basket. So we will continue picking stocks from within that basket. Not to say that there will not be expensive stocks in our portfolio or there will not be value stocks in our portfolio, but the tilt is always towards growth at a reasonable price.
All right. Well, thank you very much, Harsha. Just before you go, one last word. What about the overall market? Do you think that all these poll issues are going to keep a roof on the market? Or do you think the global rally is such that we will vault into 11,000 in 2018?
Very, very difficult to comment on short-term moves in the market, which are generally driven by liquidity and sentiments. I'm sure election and expectations around election results will play a large role in terms of determining those sentiments in the market. Hence, it will be very difficult to predict one way or the other. But I think once we go closer to the elections, I think a lot of predictions will come around, and we will get a fairer idea in terms of how that political setup is going to be. And maybe then I think it will be an easier way to participate in the market. Until then, I think one has to withstand this interim volatility and look for long-term bets rather than just trying to take some tactical moves in the short term.
Right, we'll leave it at that. Thank you very much for joining us this morning with your thoughts, both macro and micro. At the moment, the market's withstanding the worsening macros very well, you will have to say. Rupee at 66. I mean, I always believe a falling rupee is positive. And yields at 7.78 has been taken very well.
Has been taken very well, but because of the sheer weight of IT as well. We've discussed this over the last 6 months. The balance which has happened, we had become too dependent on financials when we had gone to 42% on financials, 8% on IT. I think we're now down to 34% on financials, and I think somewhere around 16-17% on IT. If you see the contribution plate, let's just quickly see the contribution plate. That despite the Bank Nifty down about 0.5%, the Nifty is almost about to break into the green, and that's because TCS, Infosys are contributing about 25 points on account of TCS and Infosys, and you can add, of course, others as well.
Very reminiscent of the early 2000s. This is how the plate used to look, extremely IT heavy. Okay, with that, let's move to a third sector, metals. They've been also the cynosure of the market, especially aluminium. Aluminium prices have surged, 25% in the past few weeks. That is after United States levied sanctions on several Russian businesses, including Rusal, which is one of the largest aluminium producers in the world. Where do we go from here? There's a slight trimming in the last 24 hours. Alistair Ramsey, the head of research at Metal Bulletin Research, joins us now. Alistair, thank you very much for joining us. Well, as I've been saying, aluminium prices probably have risen by about 25% in the past 4 to 5 weeks. What is your estimate of these prices, LME aluminium, for the rest of 2018?
Well, great question, Lata. Our perspective on the current spike in aluminium prices is that it will prove temporary. So I'm sure you and your readers know the figures. if we were looking at the start of April, prices were some $600 a ton, maybe less than they are today. Our outlook is typically for a slight, let's call it a modest decline in the price through the next quarter, from sort of 2,200 to 2,100 levels. So we're not really foreseeing this latest spike in both the LME price and also the premiums as a long-term phenomenon. One interesting point when you look at the data on aluminium is just seeing that, well, Chinese exports are through the roof. So there is a problem clearly with Rusal in the States. But if Chinese exports can increase to record levels in the first quarter and stocks accelerate, there may not be, globally speaking, too much of a problem when it comes to aluminium supply. And as such, these high prices are likely to be caught back by the market over time. So at this stage, we're not really changing our outlook for the year.
Okay, so you're not changing your outlook for the year, and the current spike in aluminum prices is only temporary. But what about copper prices? They've also risen. What is your view on how the next 2 quarters would pan out for copper?
It's a good question with copper, because I suppose some of the base metals that aren't really associated to things going on in aluminium have not been so affected, and yet copper's picking up somewhat. So I think there's two things there really. The first is that copper was just, relatively speaking, unimpressive through the first quarter. It was one of the few base metals in China which was able to accelerate in terms of its production. I mean, copper production rose something like 8% according to the official statistics we've just seen over the first quarter, and that obviously led to sluggish fundamentals. Yet actually since April, stocks are falling. It could be a production response. We're yet to get data confirming that, but it could also be that there's this seasonal demand rally in the market. So at the moment, copper's doing quite well. That's not terribly unsurprising. Norilsk nickel, connected in some ways to Rusal, is also, of course, a copper producer. So there's an element of this story moving into nickel and copper, and not into, say, lead and zinc. But I think generally it's just the simple fundamentals for copper that are doing quite well.
So fundamentals are improving, but what is the price range for copper, you said?
We've got a $7,200 average for copper this year. So that's up about $1,000 year on year.
Alistair, what about steel prices? Do you reckon they could surge as well with economic growth improving?
It's a great question. I think in most countries of the world, the economic outlooks and in particular the industrial outlooks that drive steel consumption are largely improving. We look at these things once a quarter, and every quarter over the past 2, we've been upwardly revising our industrial production. So that's going to pull the demand for steel higher. The trick, though, is more when it comes to supply and where the demand's going to come from. There's a risk still for us that Chinese demand is not going to grow again this year like it did last year. I mean, it grew 12% last year. There wasn't really anything particularly fundamental about a 12% growth in steel consumption. There's therefore some overhang of stock. There's a little bit of sluggishness in the Chinese steel consumption sectors, particularly in the manufacturing products, which for years have been the fastest growing products for Chinese steel. Things like cars and washing machines, all those manufactured steel containing goods are really not doing so well this year. As a result, we're suspecting that there will be a bit more of a return to exports from the Chinese market. So even though demand will be strengthening in other markets, it's likely to be covered to some extent by Chinese competition, which was absent from the market in 2017. So in a sense, the demand perspective is better this year than it was last year, but we're not yet willing to believe that the prices can go up to reflect that stronger demand environment in general, largely because of what's happening in China. You may have seen that Chinese rebar production, so the construction steel bellwether, that's still rising by 20% a year at the moment. It's extraordinary growth in production. There isn't that sort of demand in the market, and as such the prices are coming down, and that will sooner or later have an impact on the rest of the world.
All right, we'll leave it at that, Alistair. Thank you very much for joining us with your thoughts on base metals and on steel. So, Alistair, not extremely bullish on steel, production out of China rising, but copper is where he thinks that there is a fundamental likelihood of prices rising. But aluminum is the stock on our, or the metal on our radar. And to continue that discussion on where aluminum and alumina prices are headed, T.K. Chand, the Chairman Managing Director of NALCO, joins us. Good morning, Mr. Chand. When you last spoke to us, which was not too long ago, you said that alumina prices have risen to what, $710? Can you tell us what the recent trends have been and how the next couple of months look?
Yeah, last tender we have got $601 in alumina, and yesterday we had opened another tender which is 718. So there has been an increase of around 19% over the last tender price of 601 and this tender price. And now the market, alumina market, is completely driven by supply disruption, shortage and sentiment.
Sure.
So these prices are quite high, but for some time it will be there. Till the time some kind of adjustment in the market takes place. Okay. So now the price trend is quite in the surge, and it is going up, and we expect that somewhere between $700 to $800 the prices will move.
Wow, Mr. Chand, good morning. You said 718 for that overnight tender?
Yeah, yesterday it was open and it was 718.
718, and you expect this to be 700 to 800 for next 2 days?
It will move between 700 to 800 because right now in the market with Alunat 50% capacity down, 2.5 lakh ton shortage was there. Now with sanction against Russell, this gap has become a gulf. So market is acutely driven by shortage and also strong sentiments, because on the other side prices of aluminum is also going up. So therefore the smelters are ready to buy at whatever price it is available.
In fact, I was going to ask you about the price of aluminum as well. You know, the last time you told us that the company would be a bit positive in the aluminum business if prices sustain at the current levels. In fact, prices have moved up since then. So are we expecting, or can we expect an EBIT positive number in the next few quarters?
Yeah, for every $20 increase over the last year's realization in alumina, we get an additional EBITDA of 170 crores. And for every $40 increase in aluminum over the last year's realization, we get an additional EBITDA of 120 crores. So with this level of price, if we take $600 as the average price, which will be remaining for some time, and aluminum price I am taking around 2,550. So there will be a doubling of the EBITDA, and it will have a strong impact because EBITDA will move somewhere to 40%.
Okay. Can you give us some idea of aluminium prices as you see them later? You know, Goldman Sachs is warning about $3,000 also. What has been the average for you in terms of sales, and what is the forecast for, say, at least 1 or 2 quarters down?
Yeah, aluminum prices in past, it has gone 3,000 and above during the head edge of metal market, and now market is completely driven by shortage because with sanction against Russell and some of the aluminum plants not producing to their capacity, now the market has gone into quite shortage. So we hope that prices will still continue because today's price 2,600 plus. So we are expecting that somewhere between 2,900 to 3,000, the prices will be there, because already alumina prices will also give a push to this price because cost push factor will be there. So therefore, the prices movement will be quite strong in aluminum also. And we have been selling whatever we are producing, and there is quite a lot of demand from the customers because they want to keep the aluminum. So that sort of a sentiment is driving down the market. So there is a strong spike in the aluminum as well.
Okay, just to confirm, you said 120
in the aluminum as well.
Okay, just to confirm, you said 120 crore EBITDA for the aluminum business. By when would you see that? Is it in Q4? Is it?
Yeah, with the average price, because if you take the average price to come $2,550 over a given period, then that sort of a EBITDA will be coming. And right now, the average price of our alumina is around $600 because last 3 tenders, if we average it out, it is coming. So I have taken $600 as the average price of alumina and $2,550 for aluminum. With that, that kind of EBITDA will be coming. And this will double the EBITDA of the last year, and this will also increase the EBITDA margin. Also, EBITDA margin will also get doubled. It will be somewhere 40%.
You expect your EBITDA margin to be 40% for alumina, is it? Or for generally?
Alumina and aluminum together.
It will be 40%.
40%, yes.
For what, this quarter, or you think that that can be the FY19 average?
Yeah, this quarter itself, I hope that this sort of EBITDA will be coming, because I have taken average price of alumina 600, which already we have obtained, and aluminum prices are yet to come, average of 2550. Because of this strong increase, movement beyond 2600, we are hoping that average in this quarter will be coming to 2550 minimum.
What about the input costs, caustic soda costs, etc.? They've been around 40,000 rupees or so. What is the expectation going ahead?
Yeah, as far as caustic soda, right now it is hovering around 40,000 to 41,000, and availability is there. There are no reports that it will be in shortage or it will not be available, because in our tender, which we make it for 6-month contract, so there already we have got, and that has been tied up. Similarly, petcoke, then city pitch, all with 6 monthly contract, the prices have already been firmed up. So this quarter, the prices, whatever at the existing level it is there, it is to continue, because the supply will be the contracted price.
Okay. Mr. Chand, we will leave it at that. Thank you very much for joining us and giving us so much data on how things are panning out in the aluminum market. Red hot is this metal at this point in time, with both alumina and aluminium working to the advantage of NALCO. It's one of those few companies which sells both the raw material as well as the finished product, and therefore is a beneficiary. A 40% margin is what the chairman is expecting. With that, let's, but at the moment, NALCO prices are negative, and that's, I think, got to do with the current trimming in
profit taking. Yesterday was up 12% intraday, of course, Lata, and when the series started, it was somewhere around, I think, 60, 65. So from that point, it's been a big rally. Perhaps today is the day you will see perhaps buying resume in second half, because the overall trend is intact. Initially, you thought that overnight tender was
prices trimmed a bit.
Exactly. Overnight tender was not a disappointment. At least that's what we know. But let's see whether these prices sustain or not.
Prices trimmed overnight. Overnight, all LME metals have trimmed a bit. And of course, the Metal Bulletin guy thinks that this is not a sustainable trend. So let's wait and see. We've got Amit Dikshit, the research analyst at Edelweiss. He tracks metals very closely. Amit, would you still buy NALCO?
We don't have a coverage on NALCO as such, but if you ask me, I'm in between all the aluminium or alumina related value chain. We would prefer companies who have got alumina exposure. Aluminium prices, as you would have noted, have trimmed down a bit, particularly because some of the concerns regarding Rusal's material entry into the market has been allayed, particularly after there are indications from Kremlin that they might go ahead and nationalize Rusal. But at the same time, one has to remember that, the El Norte issue still persists. And curiously enough, what is not appreciated that much in the market is the fact that smelters are unable to restart, not because of cost, not because of prices, but because of the fact that alumina is not available. Alunorte used to contribute around 15% of the third-party sales in the world. So despite the capacity being just 3%, that particular refinery had 15% share in the third-party sales. And this, I see, would be a major production disruptor. And therefore, alumina-heavy guys, such as, even if you see the stock price movement of, let us say, Alcoa, see stock price movement of alumina, globally, it is far muted as compared to some of the Chinese guys who are less integrated on alumina, likes of Chalco, likes of China Huangqiu. So definitely, and alumina, at the end of the day, it will support aluminium prices because currently at the level of 23% of aluminium prices, this is like a historically high thing. And this cost push definitely will make sure that aluminium prices remain on the boil, so as to say, for some more time to come.
But alumina is the only fellow who's selling in India is Nalco. Why aren't you covering the stock? Aren't you missing the bus?
No, not really. See, it was like, this particular thing has happened in like a few days back. So it's not that we are missing the bus, to be honest. We are covering other companies as well. So, it's not like that.
So in the list of other companies that you're covering, your top pick is Tata Steel. But you have quite an aggressive target price, I must say, 985. That's like a 60% upside from the current levels. What's the rationale there?
No, this target price is actually, we have not adjusted as yet for the equity issue that they came up with. So if you adjust to that, it would be around 887, 889 roughly. But still in the public domain, it's 985 because we have not adjusted it, to be honest. So Tata Steel, we like the stock. The thing is that still, as I mentioned in my last interaction as well and some of the earlier reports, that the positives of the Bhushan have not been really appreciated. The kind of auto capability it brings in and the kind of value addition that Tata Steel can bring in raising the EBITDA per ton of that unit. So once that happens, you would see Tata Steel on the uptrend again. But certainly there are more uncertainties at this moment on Tata Steel.
Okay, well, by the way, I just want to point out PSU banks. Just take a look at what's happening now with some of these stocks. Bank of India's intraday chart would come up for you. Is the rally over there, and are they seeing a big tick? Look at that move on Bank of India. It's now almost getting a thrashing. 5% lower is what we have on Bank of India. And in fact, a lot of PSU banks right now are making lows of the morning, and the Bank Nifty as well is making lows of the morning right now. We're down about 150 points on the Bank Nifty, and the Midcap index is now down 90 points, and advanced decline looking like 1:2. So bit of a rough morning this morning for the market, Lata.
Okay, Amit, thank you very much on that note, but I'm a little surprised with that. Actually, the bond yields after starting at 7.78 have now come down to 7.74. So it's not as if there is incremental negative news from that quarter. As well, I hope it doesn't happen, but if the power minister and others are able to prevail upon RBI, there is immediately actually a P&L relief for many of the corporate lenders. But today the market is choosing. No, that's not the bond yield. It's not 7.63. 7.74, I thought. That's mistaken. That's yesterday's bond yield. It's 7.74. But there is no incremental negative actually. Yeah. And as Ashwini pointed out, everybody knew about crude prices. So bond yields should have factored all that in. Today, in any case, banks are not the loved sector. We will visit all these stocks yet again with our technical experts. For the moment, we take a break and we are coming back with Sandeep.